Tesla shares down in the pre-market after the company missed earnings expectations for the second quarter. Automotive sales actually dropped 7% year over year, and gross margins hit 14.6%. That was less than half the level from a little more than 2 years ago. Joining us right now on the quarter and the challenges and opportunities ahead for Tesla is Jon McNeill. He is the CEO of DVX. He's Tesla's former president and is on the board at General Motors. And Jon, let's talk about this. It looks like Tesla shares now down by 9%. That's about the equivalent of their year-to-date loss, too. What do you think of the earnings that you saw?
Well, I think we had a compare and contrast between Tesla and GM yesterday, for sure, in earnings. I think the story on Tesla is what's bad for Tesla is good for the sector. There's more competition, there's lower prices, there's continued demand growth. But the story is the competition's here, and now there are dozens of compelling EVs that give customers attractive options. And because Tesla's lineup is aging, they have to discount more aggressively. And as a result, Tesla's margins now look like everybody else's in the car industry. So Tesla's in an increasingly tougher competitive situation, which has forced them to discount. That squeezes their margins. And yesterday we saw that they had close to $1 billion of tax credits or energy credits in both their top and bottom line. And those will shrink over time as now the other EV manufacturers increase their output.
I hear what you're saying about your concerns with Tesla, but if you look at the business and finance section of the Wall Street Journal today, they lay out Tesla's here on the left. On the right, though, it says GM delays electric vehicle build-out, a new sign of weakening demand. It sounds like it's not just Tesla that is dealing with this, Jon.
Yeah, I think that the GM is executing through this consumer demand. The growth is still there. GM is growing faster than the market in EVs. GM's EV volumes were up 40% year over year in the second quarter, while the industry grew 11%, so almost 4 times the industry growth rate. But you're right. I think it's an advantage that GM has to execute when they've got a gas car portfolio and an EV portfolio, and they can definitely manage their production to meet the demand where the consumer's at.
Which is not necessarily with EVs at this point. Jon, let's talk about what the future holds, because both General Motors and Tesla yesterday said that they're not going to be doing some things quite as quickly as we thought. With Elon Musk, he talked with Tesla about how those robo-taxis are not going to be coming along as quickly. They'll be unveiling one in October, but that's going to be a prototype, not broadly manufactured at this point. And yesterday, GM said that it was going to discontinue for some indefinite period of time the idea of having driverless cars, too.
I think that's actually wrong. We're not postponing driverless. In fact, Cruise is out on the road. Cruise has 5 million miles of autonomous driving.
Okay, Tesla, not Cruise, the Cruise version where there is no steering wheel. That was discontinued yesterday.
That's right. We felt like pushing a no steering wheel, no brake pedal version was further than the safety advocates and the public want to go right now. And so we're driving down costs and using a beloved EV, the Chevy Bolt, as the autonomous robo-taxi for Cruise. It'll have lower costs, and I think it meets the market where it's at.
But this idea of completely robot driving, that's going to be a long way down the road.
I think, yeah, this is, we've got autonomous driving now with Cruise and Waymo, and I think you're going to see it expand, but it will go slower. I think that people have forecasted. I think we've been waiting for years to get to full autonomy everywhere. But I think what Waymo and Cruise are both doing is putting safety first and really putting the communities that they're operating in first, too, and making sure that the rollouts are very thoughtful, but at the same time, really meeting demand. There are a number of people who will benefit from AV, not only in terms of reduction of accidents, but people who are challenged to drive. I've got a blind friend who can't wait to be able to have a car that drives him where he wants to go when he wants to go. He keeps calling and asking, when can I have my first ride where I drive? And so that's going to pull that technology forward, but it needs to be done in a really thoughtful way that appreciates safety first.